All right, today we're going to talk about a company that might just be sitting on a gold mine. It's called Bloom Energy, and it's right at the center of two massive waves crashing together: our desperate growing need for more electricity and, of course, the absolute explosion in artificial intelligence. So the big question is, could this company be the key to unlocking AI's future? Let's dive in. But first, let me ask you something. When you think about AI, you think about incredible algorithms, massive amounts of data, maybe some genius coders in Silicon Valley. But what's its single biggest Achilles heel? What's the one thing that could stop this whole revolution cold? It's not the software. It's not a lack of data. It's power. Just raw, massive, almost unimaginable amounts of electrical power. And when I say massive, I'm not kidding. Get a load of this number. Some projections are showing that by 2030, data centers, just data centers, could be eating up 16% of all the power in the United States. Now, to give you some perspective, before 2022, that number was just 2.5%. So we're not talking about a small little uptick here. This is a vertical leap that our current power grid is just not ready to handle.
No way.
And that brings us right to the core of the issue, what some experts are now calling AI's unsolvable power problem. We're building out this incredible AI infrastructure at a breakneck pace, but it's creating this huge energy crisis. And the system we've been relying on for the last century, it just wasn't built for this. Here's where the problem really gets tangible. You've got literally trillions of dollars being poured into these brand new, cutting-edge AI data centers. But they're trying to plug into a power grid where the average transformer is almost 40 years old. It's ancient. And fixing it, upgrading the whole system, that's not a weekend job. We're talking 7, maybe 10 years. But here's the thing. AI companies can't wait a decade. They need that power yesterday.
So if the grid is the bottleneck, you have to find a way around it, right? And this is where our company, Bloom Energy, steps into the story. They've got this fascinating piece of tech that some people are calling a box that literally changes everything.
Okay, so the official name is a solid oxide fuel cell, but forget the jargon. The easiest way to think about this thing is as a power plant in a box. I mean, you can literally just drop one of these things in the parking lot of a data center, hook it up to a natural gas line, and boom, you've got your own private 24/7 power source completely independent of the shaky old grid. It's a direct, on-site fix to this massive bottleneck problem.
But wait, it gets even more clever. You see, the power grid and the fancy AI chips inside these data centers, well, they speak two totally different languages. The grid speaks in what's called alternating current, or AC. Let's just call that English. But the sensitive little microchips, they need direct current, or DC. We'll call that Japanese. And just like with languages, you need a translator. For your laptop, that's that big black brick on the power cord. For a data center, it's a colossal system that wastes a crazy amount of energy just making that conversion.
And this is Bloom's secret weapon. Their boxes don't speak English. They natively produce high-voltage DC power. And here's the absolute kicker. They just so happen to output 800 volts of DC, which is the exact power requirement for NVIDIA's brand new game-changing Blackwell AI chips. It's a perfect one-to-one match. No need for that wasteful translator. I don't know if this was a stroke of absolute genius or just incredible luck, but either way, it's a massive, massive advantage. Okay, so the tech story is awesome, right? It's compelling, but a good story isn't enough. We need to see if the financial data actually backs it up. So let's get into the numbers. First thing you look at is revenue. Is the company actually selling this stuff? And the answer is a clear yes. They've gone from just under $1 billion in 2021 to a forecast of over $2 billion in 2025. This isn't some startup with a dream. This is a company that is already scaling its sales at a very rapid clip, which tells you the demand is real. Now, this might be even more important. It's one thing to sell a lot, but it's another thing to actually make good money on each sale, and that's exactly what we're seeing here. Bloom's gross margin, basically the profit it makes on its products, is on track to nearly double between 2023 and 2025. That's a huge sign that the business is getting more efficient and a lot more profitable as it grows. Now, look at this number, $20 billion. That's the company's total order backlog. These are future orders and long-term contracts that are already signed and on the books. For an investor, that provides incredible visibility into where future revenue is coming from. It shows that huge customers are making serious long-term bets on Bloom's tech.
And who's writing these checks? It's not just anybody. This quote really hammers it home. We're talking about people like Larry Ellison, the founder of Oracle. He just signed a massive deal for Bloom to power their cloud business. I mean, when a tech titan like that, with an army of the world's best engineers, gives this kind of stamp of approval, you really have to sit up and pay attention.
Okay, I know. The story so far sounds incredibly good. Almost too good. But no investment is a sure thing. So to give you the full picture, we have to flip the coin over and look at the risks, the rivals, and any potential red flags. So what's the case against Bloom? Well, first, management has a bit of a reputation for missing their own targets, which Wall Street absolutely hates. Second, the stock is a wild ride. It's super volatile. Third, the tech, at least for now, runs on natural gas. That opens them up to swings in energy prices and, of course, environmental concerns. And maybe most importantly, they are not the only game in town. And that competition, wow, this is where you get a real dose of reality. Look at the size of these companies. Bloom is the focused tech player, sure, but it's in the ring with absolute monsters. You've got Cummins and Caterpillar, industrial titans with global reach and decades of trust. Then you have companies like Vertiv, who are already kings of the data center world. These aren't startups, they're huge, well-funded giants. For Bloom to win, they can't just be a little bit better, they have to be flawless. So we have this incredible potential on one side, and these pretty serious risks on the other. How on earth does that translate into what the company might actually be worth? Well, let's look at two very, very different paths. Okay, on the left, you've got the super optimistic blue sky scenario. This is some napkin math that says if Bloom captures just 20% of this enormous AI power market, you could see a revenue explosion and a stock price of $1,000 a share. Then on the right, you have the much more sober analyst view. They're looking at current growth and putting a price target more in the $100 to $120 range. And that comes with a downside to $50 if things go wrong, or maybe upside to over $200 if everything goes perfectly. That huge gap between the two really tells you everything about the risk and the potential reward here. So if we boil this whole thing down, the entire investment case really comes down to these 4 steps. 1, you have the problem. AI is growing like crazy, and it's creating a massive power shortage. 2, you have the solution. Bloom's elegant power plant in a box that seems perfectly designed for the problem. 3, you have the proof. The revenue is growing fast, and they have a $20 billion order book. But number 4 is the risk. They face giant competitors, and there is absolutely no room for error. And really, that's what it all comes down to. Is Bloom Energy this essential piece of the puzzle, the key that's going to unlock the future of AI by solving its biggest weakness? Or is it a really fascinating but ultimately high-risk bet on one technology in a brutal race against giants? That is the billion-dollar question the market is trying to figure out right now.